Hello friends, welcome to another episode on Consulting Interview Prep with me, Nilay Bhatnagar. In this episode, we'll take a closer look on how to approach market entry cases. Now, market entry cases are again a very common case type that you'll encounter. Now, one quick call out, market entry cases and product launch cases tend to be very similar in terms of their approach. So as we are covering the market entry approach, I'll also talk about what modifications you need to make to this approach to fit a product launch case. Right? With that said, let's dive into how we approach market entry cases. Now, there will be two variants of these cases. We'll cover the more expansive version here. And in this version, you can expect that the client is interested in first understanding whether or not they should enter the market. So you're required to evaluate their decision of entering the market. And if that's a yes, then how exactly should they enter the market? So what should be their go-to-market strategy? In the other version, the emphasis would be less on the go-to-market aspect. You'll still cover it, but not in as much detail as the first one. All right. So now let's talk about how do we address the more expansive version of market entry cases. So there are four areas here that we'll evaluate. As you can see, these would be how attractive is the overall market in which we are considering an entry? Does this entry meet our financial objectives? So is the economics of this entry actually attractive? Or do the returns outweigh the investments that we'll have to make? Number three, what should be our go-to-market strategy, or what capabilities would we need to enter this market? And what are some of the key risks associated with this entry? So now let's take a closer look at each one of these. So how attractive is the market, right? So at a high level, markets are considered attractive when they are large and growing, or at least they have a few fast growing market segments. They have a fragmented competitive landscape. So there's no one or two big players that dominate the market and make it very difficult for new entrants or smaller players to exist and thrive in this market. The market should have healthy margins and some macro tailwinds, right? So this could be in the form of regulatory support, right? This could be in the form of a thriving supporting ecosystem, etc. So those are the broad areas. So as you can see, understand the market characteristics, the size, the growth rate, the key market segments, the macro headwinds and tailwinds, and then analyze the competitive landscape. Right? How many competitors, who they are, what is their market share, what do they offer, what are they known for, etc. Okay. Moving on to our second bucket now. Does it meet our financial objectives? Now, since we're talking about market entry in the context of for-profit organizations, they definitely have a profit objective or a financial objective tied to these entries. And typically, you will be asked to compute a payback period, a return on investment attached to this market entry. So in order to figure out whether our entry will actually meet our financial objectives, we look into three areas. First, we'll start by actually considering what should be the mode of entry, right? Because this will actually dictate how much revenues and cost we accrue as part of this entry. There are three big variants or three big flavors in which you can enter a market. So this is number one, greenfield or organic. So this is where your client actually will do everything. This might be quite capital and time intensive. Right, and you also don't have the expertise, but you'll have full control. You'll enjoy all the profits that come from this business. Number two, it could be a joint venture with an existing player. Now, this is a good compromise, right? You will work with a partner that already has certain capabilities, has a presence in the market in which you're trying to enter. So this should definitely reduce the time it would take to set up your operations and enter the market. But at the same time, you'll have to do some profit sharing depending on how the arrangement is agreed upon by the two parties. You have to see who will have decision making rights in which scenarios, right? So it might be a little more complicated to execute. And the final way is where you actually acquire a company, where you actually get full control by acquiring the company. This is probably the fastest way of getting into a market. But again, this comes with its own unique challenges where you'll have to shell out a lot of money initially. And integrating two companies is never an easy job, never an easy task, right? So all these three ways or modes of entering a market might make sense depending on your client situation. Now, the next two parts will focus on the revenue and the cost components of this. Now, as I already mentioned, this will change depending on your mode of entry, but keep that aside for now and just let's talk about what would be the revenue potential. So here, what is very, very important is to assess a product market fit. Do we have a good product market fit? Are we offering what customers actually want? Are we differentiated from our competitors that allows us to gain market share? How are we going to price this product, right? And that will give you an estimate of how much revenue can you expect. And the final bucket would be looking at the upfront investments and some ongoing cost. Upfront investments are investments or things that you have to do when you need to enter a market. So this would include any market research, right? Any infrastructure that you'll have to develop. You might have to set up your supply chain, manufacturing, etc. All of this is your upfront or one-time investments, right? And then those ongoing costs would be your, cost of goods sold, cost of sales, and operating expenses. Now, please remember to customize everything I was talking about here depending on the client situation in the case that you're given, right? Contextualization is key. Not everything that I'm talking about here would be applicable to the case. So please don't just blindly memorize all of this and just start uttering in every single market entry case, right? You have to contextualize it for the client, right? Okay. So that's how we would talk about the upfront cost. And now if you do all of this revenue potential and upfront cost, ongoing cost bit, you will be able to compute the payback period, the break-even number, break-even sales, the ROI, etc. Okay. Now, how would you adapt this for a product launch case? Again, the mode of entry might not be that relevant, right? You might be just launching a product into a market on your own. You'll have partners, but those partners might be for different things, right? So mode of entry might not make so much sense for a product launch case. The other two areas definitely will still be relevant for a product launch case. All right. So now let's move to our third bucket, which talks about the go-to-market strategy. Here I briefly mentioned what are the pros and cons of different modes of entry. You can take a look at this later on. So I'll just skip this for now. We briefly covered it when I was talking about these different modes of entry. So now the third question was, what should be the go-to-market strategy? What capabilities would we need to enter this market, right? So I've mentioned 4 here. There might be other things. First and foremost, you might have to make some product adaptations to match the requirements of the local customer base, right? Secondly, you'll have to think about setting up your operations, right? From your procurement, manufacturing, production, outbound, and distribution, right? You'll have to think about all of this, right? Again, this might depend on the nature of the industry, but setting up your operations and supply chain will be critical in the new market. Third would be sales and marketing tactics. This is a key component of any market entry case or product launch case. You'll have to think about who will be your target customer base. What messaging would you use? How would you brand? How would you package and design your product, right? What channels would you use, right? Social media versus print media versus digital media, etc. If it's a B2B scenario, right, your sales team becomes very, very effective, very, very important, right? How good is your sales team? How well trained are they, right? Are they knowledgeable about the product? Can they maintain relationships? Are they good at following up, etc., right? So these become critical factors for success. The third thing would be talent acquisition, right? So you'll have to acquire maybe local talent, right? You'll have to definitely fill new roles. You'll have to mobilize workforce. Maybe you'll bring some people from your other locations, right? Another thing that would be important is leadership commitment and support, right? The leadership should be behind this. You should be actively supporting this. So these would be the critical elements of your go-to-market strategy. This will pretty much be the same for a product launch case, so you don't have to modify too much for a product launch case. And coming to a final bucket, which will be the key risks that we should be thinking about. So there could be some market-related risks. So market assumptions might be incorrect, underestimations or overestimations about our projections. Or there could be some risk related to competitor response, right? How are they going to respond? Have we thought through all the competitive response scenarios? Do we have a backup plan in each case, right? And there would be definitely some opportunity cost, right? What are we not doing by doing or entering this market or launching this product, right? So we should be mindful of how, where and how we are utilizing our resources. Okay. So just to summarize our approach for market entry and product launch cases, we look into 4 key areas. Number 1, how attractive is the overall market, the size, the growth rate, the key market segments, and the competitive landscape. Does this entry meet our financial objectives? That will be the second area. So is the entry economically attractive? So here you look at the modes of entry, you look at the revenue potential, you look at upfront cost, and you look at ongoing cost to calculate what will be your payback period or return on investment. The third element would be what should be the go-to-market strategy, right? So here we'll talk about any product adaptations to meet the local requirements, setting up the operations or the supply chain setup, devising attractive sales and marketing campaigns, acquiring the right talent, getting leadership buy-in and commitment, etc. And the final element would explore the key risks, and risks would be categorized into market-related risk and key opportunity costs. So that wraps up our approach for market entry cases and product launch cases. As next steps, I would highly recommend that you take what I've shared over here, create your own recipe, apply it to multiple market entry and product launch cases, and refine and finalize. Right. One final call out before I wrap up this particular episode. Market estimation questions can actually be part of market entry cases. All right. So when you're talking about market attractiveness of the market, they might actually ask you to estimate the market size. We won't get into market estimation in this video. We'll cover that separately, but I just wanted to call that out. So I hope you found this video useful. I'll follow this up with another video where I'll apply this market entry framework to a real McKinsey case. Till then, take care. Goodbye.